I'm 680 News senior business editor Mike Eppel. Canada's big banks might be on the verge of lowering mortgage rates. We have seen bond yields where the big banks take their cues for rate policy. Bond yields have tumbled to multi-year lows following the Bank of Canada's dour forecast on economic growth, and they talk that interest rates on the benchmark Bank of Canada overnight lending rate won't be going anywhere anytime soon. We've seen bond yields tumble, and this could be a signal that the big Canadian banks want to spur on some mortgage business with lower rates. We pose the question to Robert McLister of RateSpy.com.
So the typical 5-year fixed rate is around 3.49% or less right now. It's less than that even if you have an insured mortgage. We've seen some lenders, HSBC, become the first lender to drop 5-year fixed rate below 3% since September. All the big banks not only want to get more aggressive but need to. We're in peak season for mortgage sales, and if they don't have a blockbuster spring, then that will potentially cause them to miss their numbers for the whole year.
Meantime, from first to worst, the Canadian dollar has seen a tumble over the past week, down to around 74.5 cents U.S. today, a 2-month low. Just 2 weeks ago, it was the best performing currency of 2019. Then we started to get those weak economic signals, and of course, the Bank of Canada's reduced guidance on interest rate policy. The Canadian dollar now out of favor. And of course, this comes at the start of the March break getaway. So if you're exchanging the currency, it's at $1.34.5 plus service charges at the big banks. Global stock markets took a tumble today, and that was related to the European Central Bank's dire forecast on the Eurozone economy. They're worried about everything from the Brexit file being still open and big unanswered questions related to that, plus localized economies, whether it's in France or Italy, seeing lower economic growth prospects. The European Central Bank today cut its growth forecast to just 1.1%. That is down more than 0.5% from where it saw the Eurozone economy growing just 3 months ago. So we saw European markets tumble today, and the Wall Street markets were down as well by more than 200 points in the Dow. 4-day losing streak now for the U.S. benchmarks. And is the SNC Lavalin scandal distracting the federal government from what's going on in Western Canada, specifically on the Canada-China trade file, now dramatically affecting Canada's canola shipments to China? As one of the major brokers, Richardson International has seen its license blocked by China for Canadian canola exports, which could cost, according to Rachel Notley, the Premier of Alberta, upwards of 3,000 jobs. It's a multi-million-dollar yearly export market for Canadian canola growers and could be of public policy interest, as the federal Liberals have argued, for the SNC file as well. From the 680 newsroom, I'm Mike Eppel for City News.